Big4.com is pleased to release its 2012 Big Four Firms Performance Analysis, a unique analysis of the 4 largest accounting firms in the world. KPMG reported 2012 combined revenues for the fiscal year ending on September 30th, 2012 of $23.03 billion versus $22.71 billion for the prior 2011 fiscal year. This was a 4.4% increase in local currency terms and a 1.4% increase in U.S. dollar terms. KPMG noted the strong appreciation of the U.S. dollar, which impacted its reported results. Further, to better explain KPMG's modest results, Michael J. Andrew, chairman of KPMG International, commented, "2012 was a year of 2 distinct halves, with growth strongest at 6.4% in the first 6 months of the year, October 2011 to March 2012, and relatively weaker growth of 2.1% in the 6 months to September, April 2012 to September 2012. Growing our business against such a challenging economic backdrop is a testament to the quality of our people and the strength of their relationships with clients." By service line, audit fiscal year 2012 revenues were $10.31 billion versus $10.48 billion in fiscal year 2011, up 0.9% in local currency but down 1.6% in U.S. dollar terms. KPMG noted that, on the audit side, the market has never been more competitive. Tax services revenues in 2012 were $4.86 billion versus $4.69 billion in 2011, a strong 6.3% increase in local currency terms and 3.6% increase in U.S. dollar terms. Advisory services revenues of $7.86 billion in 2012 were up versus $7.54 billion in 2011 by 8.3% in local currency terms and 4.2% in U.S. dollar terms. By geography, America's region had 2012 revenue of $7.45 billion U.S. dollars versus $7.05 billion U.S. dollars in 2011, up 7% in local currency terms and up 5.7% in U.S. dollar terms. Bright spots included Brazil, Chile, and Argentina, with 20+% revenue growth. In Europe, Middle East, and Africa, combined KPMG member firm 2012 revenues were $11.51 billion versus $11.66 billion in 2011, up 4% in local currency terms, but down 1.3% in U.S. dollar terms. In Asia Pacific, combined 2012 revenues of $4.07 billion increased 1.1% in local currency terms and 1.8% in U.S. dollar terms against $4 billion in fiscal year 2011. KPMG noted tough conditions in North Asia. KPMG's relatively poor performance was impacted by 3 key factors. KPMG's Europe service line 2012 growth of 4% on local currency basis was generally at par with peers. From 2011 to 2012 on a local currency basis, Deloitte grew 6.4%, Ernst & Young grew 6.5%, and PricewaterhouseCoopers grew 5.4%. However, KPMG Europe is 50% of KPMG global revenues, thus a much larger percentage share compared to its peers. Also, the U.S. dollar strongly appreciated against the euro in KPMG's fiscal 2012, October 2011 to September 2012, versus KPMG's fiscal 2011, October 2010 to September 2011, which led to a 5.3% differential between Europe's local currency growth at positive 4% and U.S. dollar growth, negative 1.3%, and also contributed largely to the 3% differential between KPMG Global's local currency growth at positive 4.4% and U.S. dollar growth at positive 1.4%. KPMG's advisory service line 2012 growth of 8.3% on local currency basis, even though credible was clearly far below peers and below KPMG's own performance in 2011. From 2011 to 2012 on a local currency basis, Deloitte grew 14%, Ernst & Young also grew 14%, and PricewaterhouseCoopers grew 16.9%. Further, KPMG noted that its management consulting service line grew 15% from 2011 to 2012 to $2.2 billion in 2012. Calculating further, it appears that the advisory service line, excluding the management consulting service line, grew only modestly from 2011 to 2012. KPMG's audit service line 2012 growth of just 0.9% on local currency basis was clearly far below peers. From 2011 to 2012, on a local currency basis, Deloitte grew 6%, Ernst & Young grew 4.1%, and PricewaterhouseCoopers grew 3.4%. KPMG noted a fiercely competitive audit market and seemed to have been severely impacted and perhaps lost relative market share to all its three rivals in 2012. Please go to big4.com/analysis to download the complete analysis, which can be used with full attribution to big4.com.